This is Team H's firm analysis for AT&T. Just to start, AT&T was established as the American Telephone and Telegraph Company in 1885. It was founded by Alexander Graham Bell. The company's early foundation has allowed it to expand immensely and build a reputable and respectable brand. It really emphasizes the core values of the company, which include live true, think big, pursue excellence, be there, stand for equality, and make a difference. The first target market that I'm discussing is the business target market. Some of the services that AT&T provides for this target market are internet and 5G, which is just fast, reliable, and affordable internet service, cloud connectivity, so connections for hybrid multi-cloud business needs, networking solutions, industry expertise, and collaborative consulting, and voice and collaboration solutions to combine voice, video, and conferencing. Consumer target market and products and services is the next target market. So some of the services include wireless services. So these are unlimited phone plans, installment plans, business wireless plans, and devices. Entertainment through Warner Media. Warner Media just combined with Discovery. So that opens up entertainment to CNN, Max, Animal Planet, Adult Swim, and just so much more. Another service is the 4G and 5G networks, which is fast, reliable, and secure coverage, and home security, so security equipment and installation. The third target market is wholesale and carrier services, which allows access to AT&T's network for telecom providers. Overall, AT&T provides an array of products and services that offer flexibility for consumers. AT&T has just nailed its marketing and its services for its target markets, and it's proved itself as a reliable and superior company because of this. Some of its quality services include exceptional coverage, so its 4G LTE spans 68% of the nation and provides a great coverage foundation when combined with its 5G coverage. Various plans that are convenient for high, middle, and low data users. These just fit everyone's needs and budgets, and each plan offers high GB mobile hotspot allocation, so there's so many benefits that fit everyone's budgets and needs, whether they're low data or high. The third exceptional service is mobile devices. AT&T is just really good about providing the latest and newest phones and then offering promotions and deals with these phones, which allows just a lot of convenience for consumers. Then, of course, the bundling deals, which allows consumers to save 25% monthly when they have a phone plan and a wireless internet plan with AT&T. Like I said, AT&T is just really reliable and they have a great reputation. So they're one of the largest telecommunication companies, and it's just had years to build such a great reputation since it was founded so long ago. So brand equity is one of the first strengths. Their brand value is $89 billion as of right now, which is an increase from last year's $87 billion. They are the first in their market share with 46.41%, and Verizon is second with only 29%. Another strength is their products and services. As I have mentioned, they just carry products and services that cater to each of their target markets so well. These range from networking and consulting for businesses to great bundled deals for consumers. Their third listed strength is network infrastructure. AT&T is the largest fiber internet provider, and it has invested $100 million to enhancing its 5G network and strengthening its communications network, which is going to be a huge strength for AT&T since 5G is so much on the rise right now. The fourth strength is strategic partnerships and alliances. The first one is with Microsoft. AT&T has moved its 5G mobile network to the Microsoft Cloud, which has improved cost efficiency and productivity for the 5G network. The second partnership is with IBM, which has combined AT&T connectivity through the hybrid cloud and IBM's artificial intelligence. This improved collaboration is to just help businesses tackle technological challenges. The final strength is international expansion. AT&T has expanded its coverage into 29 Latin American countries, so overall it's really expanding its consumer subscriber base. Some weaknesses include the high debt levels, regulatory risks, and declining pay TV subscribers. At the end of the first quarter of 2023, AT&T had a total debt of $143 billion and a net debt of $132 billion, which is a lot of debt. The second weakness is regulatory risks, especially climate change. Overall, AT&T really depends on their network infrastructure, and so severe weather events or weather changes can affect AT&T's networks. And AT&T also relies on fossil fuel-based resources to provide power for the network. So any increased regulatory policies that pertain to increasing the price of emissions could drive up the price of operating costs for AT&T. Another weakness is the declining of paid TV subscribers. AT&T co-owns DirecTV, and many customers are beginning to leave DirecTV because of the obvious various other streaming services.
We now move to the key strategic issue. In the aftermath of the 2022 Warner Media spinoff, where AT&T divested itself of its DirecTV brand, although still owning a large stake of it, AT&T's major strategic issue is what direction to take to find a future competitive advantage in the aftermath of that spinoff. We have 4 different options. The first one is to focus on the mobile business. This one addresses the key issue by making a firm commitment to the mobile side of operations and to create a new competitive advantage. That potential is very high, as AT&T already has extensive physical infrastructure and the highest coverage of any wireless provider in the U.S. The analysis for financials is quite favorable, as AT&T is already the market leader in this industry, and it can continue to become more efficient and effective along that value chain as it turns its focus towards the cellular service industry. It would allow it, hopefully, to catch up in 5G coverage to match its major competitors of Verizon and T-Mobile, and then over time, this would hopefully lead to a slow but steady gain of market share. The advantages of this approach would allow to utilize a focus strategy the same way that Verizon and T-Mobile do. This lets AT&T lean into its historic core business and capitalize on the visible brand name. It also makes use of the physical infrastructure already in its possession, and there may be an actual second mover advantage in 5G. T-Mobile had took the lead, but AT&T would not need to reinvent that wheel. It also continues the downscoping trend begun by the Warner Media spinoff. The disadvantages is that the expected advantage could fail to materialize, as T-Mobile's head start could be too big to surmount. It could also lead to a lack of diversification, as it would be an over-reliance on the cell service industry, and it limits the potential market simply to individual customers. The second option would be to focus on the broadband internet side of business. This would mark a shift away from phone service to compete in both the individual and business-to-business broadband markets. This addresses the key issue by recognizing the potential competitive advantage to be found outside the previous core business of phone service. That potential is medium in our view. AT&T is already capable of providing some of the fastest internet speeds and is one of the largest providers of business-to-business internet service. But in the long run, there are significant returns to be found, but other companies could catch up as other industry players grow the same way AT&T does. So the advantages here is that it recognizes the large lead Verizon and T-Mobile have in 5G and realizes there's no reason to compete there. It allows AT&T to utilize its internet expertise and innovative workforce to serve potentially large markets. And it's a focused differentiation strategy, allowing AT&T to make a push for the business-to-business dominance. The disadvantages is it nullifies AT&T's brand name power and no longer really markets to individuals. It neglects the large market share of mobile industry in favor of potentially lower returns, and it completely disregards AT&T's physical infrastructure that is built up over long years. The third option is to pursue both broadband and mobile businesses simultaneously, which is what AT&T is actually doing in reality. This one addresses the key issue by continuing the 2 core businesses it still oversees, because it no longer oversees DirecTV directly. The competitive advantage potential is medium to high. They already have a strong share in both markets, but it would require continued innovation from their highly capable workforce. It relies on the continued brand name visibility and high consumer reputation AT&T has, although maintaining those would be crucial. The financial analysis shows a slightly favorable but potentially highly favorable avenue here. These 2 large revenue streams could provide maximum profitability, but they would need to maximize synergies as much as possible to ensure continued strength in both industries. The danger is that one industry would come to dominate the other, and the other one would be sort of dead weight. So the long-term financial implications, there's real potential for lasting revenues, but market share in both businesses could be steadily eroded, leading to sluggish growth over the long term. The advantages of this option is that AT&T could pursue differentiation or cost leadership in either of the 2 industries. And there's large potential for synergy between both sides of the telecommunications businesses. It's an aggressive strategy, and AT&T already has long experience in both markets. The disadvantage is that pursuing both industries at once could lead to reduced efficacy in terms of resource and capabilities. They could be good at both, but not great, as they would be outplayed by focused companies like Verizon. The potential synergies could fail to form for any of a number of unforeseen reasons, and other focused companies could outpace AT&T in each industry, so they would fall farther behind in both. The fourth option is totally different. This would be a horizontal integration back into television in a new way. Just because AT&T divested Warner Media doesn't mean AT&T should stay out of the television industry forever. The likely best path forward would be a new streaming service to compete with Netflix, YouTube TV, etc. This addresses the key issue by picking a new direction in an old, familiar industry in search of a completely new competitive advantage. We think that potential is medium. AT&T already has the technological and business experience in the television industry, and it possesses an innovative ability to find new competitive advantages if the right resources and capabilities are used. The financial analysis shows a possibly favorable outcome. It's already a very crowded industry with cable, satellite, and streaming, so it makes gaining large market share difficult. And there's potential for long-term solid returns, but it's unlikely to ever become more valuable than their core businesses of cell service and internet provider. This TV reintegration would be a third business to provide additional profitability to the two core businesses. The advantages here is that it increases AT&T's diversification back to prior levels. They don't have to reinvent the wheel because they already have long experience in the TV industry, and they can utilize lessons learned from their DirecTV stream, which was not very successful. The entry barriers are low because they already have the media partner connections, and the late mover advantage from seeing PR blunders by Max and others would be helpful. The disadvantages is that re-entry into the very crowded industry of TV does not guarantee success, and over-diversification, which was the reason they spun off Warner Media in the first place, could lead to a lack of synergy and low returns. It could also divert valuable resources away from the potentially more profitable core businesses of internet and TV, and it completely reverses the trend of downscoping that they began with Warner Media devastation.
Our team recommends option 2, which entails focusing on the broadband internet business. This strategy centers on AT&T's ambition to become America's top broadband provider. We plan to achieve this by deploying a consistent go-to-market strategy to drive customer growth in both mobility and fiber segments, optimize returns on our legacy business, and execute targeted cost reduction initiatives. In the competitive landscape, AT&T faces stiff competition from industry giants like Comcast and Charter Communications. However, our edge lies in our emphasis on high-speed fiber connections. Fiber technology is disruptive, offering not only reliable internet, but also low latency, improved reliability, and significantly higher speeds. While it is not the current industry standard, AT&T has proven history of pioneering infrastructure projects such as a cellular tower installation. By capitalizing on our legacy of innovation, we aim to secure a lasting competitive advantage as the leading high-speed fiber provider nationwide. We have 3 key points to discuss today on implementation, each vital for AT&T's future strategy. Firstly, the federal government's commitment to investing billions on improving fiber networks is a significant opportunity for AT&T. The government interest in faster, better, and more affordable network solutions aligns with our objectives. It's imperative that we factor this into our infrastructure implementation plan. Secondly, the political environment is favorable for high-speed internet investments. We've seen substantial investments from the government, including a $401 million commitment from the U.S. Department of Agriculture and President Biden's administration's $42 billion plan to expand high-speed internet access nationwide. AT&T must seize this opportunity to enhance our competitive advantage. By prioritizing availability and affordability, we can benefit from the government support. Lastly, it is essential to acknowledge the challenges and considerations of this plan. The government might be hesitant in providing market dominators like us an easier path to competitive advantage. Additionally, significant capital investments are required for infrastructure upgrades and personnel. While AT&T is financially strong, we must work on reassuring our shareholders and gaining their support for this ambitious plan. Next, I will be presenting a simplified income statement for AT&T covering the years 2023, 24, and 25. I would like to emphasize that these are rough estimates and do not replace a comprehensive financial analysis. First off, we'll go into net sales, which we've estimated growth in net sales over the 3 years, starting at $150 billion in 2023 and increasing by an assumed growth rate. The cost of goods sold is projected to increase with rising sales. We've assumed a certain cost structure for AT&T's services. Gross profit is calculated by subtracting the cost of goods sold from the net sale. It follows a similar growth trend as sales. Expenses, sales and marketing, research and development, and general and administration expenses are estimated. These are based on historical spending patterns and the assumption that AT&T operations will continue to require these expenditures. We've included a line for extraordinary income and expense. Although these are challenging to predict, the figure is an aggregate of various extraordinary items and assumes a net benefit over the years. Operating profit represents the profit from AT&T's core operations before considering interest and expenses and taxes. We've estimated interest expenses and income based on a certain capital structure and financing activities. EB&T is the operating profit minus interest expenses. Taxes are calculated based on the assumed tax rate, and the net income is the bottom line, the profit attributable to shareholders after taxes. Finally, I'll be going into the balance sheet projections for the next 3 years. There's 3 key influences that we considered to shape these projections. 1, we're significantly increasing investments in broadband infrastructure, especially fiber, reflecting higher capital expenditure to drive future growth. 2, the closure of DirecTV note payables within a year will have a positive impact on our balance sheets. And 3, there's a slight anticipated decrease from shareholder equity due to reduced confidence stemming from past M&A challenges. Keep in mind that the specific numbers are estimates and will depend on AT&T's actual financial plans.